Okay, I see some questions, and I'm going to see if I can answer them for you. First question, David, do you feel the Canadian telcos are still a good investment to hold long term in light of the new government regulations that could cause their earnings to drop? And the answer is yes. I hold, in terms of Canadian stocks, I own BCE. In terms of the US, I own AT&T. Uh, I think they're both good companies. I intend to hold them for a long time. Is there a place for value investing? It seems to me that income investing is value investing. Being the TSX is buying stocks when the price is low, which is really what you want. So I'm not so sure that there's kind of an artificial division, I think, between value investing and income investing and being the TSX. I think they're all have as a primary aspect that you have to buy the stocks when they're at a good price. Data readjusts as being the TSX list every summer. Does he think that the timing is critical? That's really a good question. It's one I get quite often. I started in the May the 24th weekend because that was the anniversary of the old TSE 35. I see no reason to stop. I see no reason why one date should be any better than another. People have asked that question before, and I've always said, well, if you want to try something else, let me know. And no one has ever indicated to me that one date is any better than any other date. You recommend a foreign exposure in a portfolio. You did not mention this in the webinar. Yes, I do. Uh, I I should tell you that I probably have 80% of my portfolio in Canadian stocks and 10% in international and maybe 10% in US. So I do think the problem for me is that when I start getting these dividends from other countries, I don't get the dividend tax credit that we get here. But I do think it's important to have some distributions, yes. How to invest in DRIP plans. You can go to, I wonder if I can, Bob,
Gibb. Bob Gibb.
Bob Gibb is exactly the guy's name I'm thinking about. He writes for the Moneysaver occasionally, and he's got a website. And again, you can go to Google and Google Bob Gibb or Opera Bob and go to that site, and they'll tell you all about it, how to do that. This is a good question. I'm torn between following this method diligently and wanting to opt out of a stock such as I Am Gold. What is your advice? Well, my advice is that I always say this. You hold those 10 stocks for better or worse for a year. Other people, I know people, they kind of pick and choose, and that's entirely up to you. There are no hard and fast rules. I just want you to be happy. I've been benefiting from TFSA investments. Yes, TFSA was a little late for me. I don't have the TFSA since I am now have a RIF that I'm obligated to withdraw from. I think both those government plans are really good, and you should take advantage of them if you can, and every member of your family as well. The next crash happens, does it make sense to sell your bonds and buy equities after the crash and then sell the equity to purchase bonds again when things recover? I don't do that. I've been through two black swans in the last 12 or 13 years, and I simply write it out. I simply write it out. If you're in good stocks and they pay high dividends, you'll find that those high dividends kind of act as a pillow or a cushion underneath there. And as the price goes down, I'll pick a stock at random. I'll say TD Bank, and you know, it's 4% dividend yield, 5% dividend yield, 6% dividend yield as the price goes down and the yield goes up. And pretty soon people say, I can't not buy that. The yield is so good. So those stocks often come back first. Yes, income trusts are not included in the index because it's the TSX 60 and they have the 60 highest stocks with the highest market cap. And those REITs traditionally have lower market cap. So it's nothing against them, it's just that they're not in there because they're not big enough. Are there any free online Canadian stock performance or tracking tools, that you can recommend that can calculate from when a stock was purchased to today that includes combined capital gains growth plus their dividends from the original purchase dates? FYI, I bought 200 shares of CNBC around 200 years ago for 3. They split for 2. I have 400 shares now at $98. I would like to track real performance by share. I have around 60 different Canadian U.S. stocks, so I'm looking for an automated tool to do that. Well, I'm an old guy, and technology is kind of passed me by, so I don't do anything like that. I do have an account on Yahoo. I have an account with Yahoo Canada Finance, and I have all my stocks on there. And whenever I want to check them, I can do that. They have a pretty good repository of previous stock prices that you can go back and check. Even though you advocate beating the TSX, is there some advantage in buying some high-quality U.S. stocks? For example, Coke and McDonald's, and holding them in RSP to avoid taxes. Yes, I don't own Coke and McDonald's right this second, but I have owned them in the past. I owned U.S. stocks that paid high dividends, and I had to pay more taxes on them, but often they were in areas that I couldn't get here. And I used Johnson & Johnson as an example of a good all-around health stock that I bought a long time ago and still hold. Will you be releasing your top picks today for beating the TSX, or do we have to wait till May issue? You can do it yourself. It's so easy. All you have to do is to get the TSX 6. I'm going to in the material that I give you, I'll give you, Lana, I'll give you a site that you can go to that orders those stocks by yield, and you can pick the top 10 yourself. This is not rocket surgery. How do you identify drips? Do you need an investment advisor? You do not. They come through the drips are often offered by the company themselves through their agent. You can, with an advisor, get something that is kind of drip-like. It's an artificial drip, and there's some. It's better than nothing, but there's some problems with it. They only deal with whole dollar amounts, etc., etc. I much prefer the drips that deal that I can get from the company that puts every single penny into buying those new shares. Is IM Gold still a good choice? Would you override the top 10 selected by? Sometimes. I never have. Read the question out loud. Is IM Gold still a good choice? Would you override the top 10 selected by your being the TSX methodology? Sometimes. I never have. I never have. I know that the people say, well, you know, couldn't you do it by that and then include the PDE ratio, or you could include this or include that. I've always just used a simple vanilla methodology, and it's worked out well for me, but I want you folks to do whatever you think is best. Do you own a U.S. share in a non-registered plan? Yes, I do. Yes, I do. Yes, I do. Stocks like Johnson & Johnson and those U.S. stocks that I bought were in a non-registered plan. How to calculate average cost basis if using drips while selling the stock? Well, several people have asked me that question, and I tell you, that's one reason why I use an advisor, and I told them when we got together. This is going to be your job because I'm holding on to all those. And after I pass, then you can figure that out. The math is too difficult for me, so that's going to be one of his jobs. I think one of the things, talking in terms of investors, advisors, this guy is going to be much more useful to me after I pass away than he was when I was alive. Are you accessible to answer some investment ideas that a new investor may have? Yes, if you write the Moneysaver, line is all that on to me, and then not only you and I can read it, but it gets in the magazine so that that knowledge gets to go to more people. Do you advise setting stops on stocks? I absolutely do not, especially now. The market is so volatile, you can get stopped out of a stock, and it's expensive, and I see no reason for it. If it's a good stock, then hold on to it. That goes back to what I said kind of at the beginning. Since you're going to hold these stocks for a long time, make sure that you get good ones to begin with, and make sure that you hold them for a long time. And if the price goes down, don't worry about it. They'll come back. I have many investment accounts. How would you use beating the TSX amongst them? I think the question you're asking is in the area of tax-wise investing. How do you invest best in terms of taxes? It's a big long topic, and one of the references that I'm going to give you is for a Canadian wiki on investing, and one of the things you'll find there is tax advantaged investing. And I suggest that you go there, and they will answer that. That answer will be there for you. We talked about that $40,000 little experiment that we did. The figure you needed for average retirement, including CPP and OAS in this after-tax money, if only using an RSP, would you have to perhaps withdraw more? And the answer is yes, you probably would have to withdraw more. The Stats Canada paper said that most people would get somewhere around 50% what they required from their OAS and CPP. After a year, do you sell all the stocks that are not on this year's list? Well, that's the kind of the whole point that I was trying to make. You can sell them if you want, but the whole idea is if you have a stock like, for example, BCE, and it falls off the list simply because the price went up, is that a good reason to sell it? And you don't really have to. You can keep that as part of this portfolio that you're building up of high dividend paying stocks that you've acquired because you acquired BCE at a much lower price. If the price has gone up and it's off the list, that doesn't mean you have to kick it off. Keep it. If you feel like it. If you feel it's a good stock, you keep it.
Which one did you want to do next?
Well, it says I purchased TransAlta a few years back and still have it. It's down almost 40% since I bought it. Should I sell it or hold on and still with a blue chip with high dividends? And I asked her to read that question, put that question up for me, because I did the same thing. And last year, it was on the list. And as a little example, I bought more of it. And I'm still holding on to it. Actually, I think it was a very wise decision on the company's part to cut the dividend. It was probably the best thing. I don't fault them for that. It was a sound business decision, and I'm not worried about it. I'm holding on to TransAlta, including the additional shares that I bought last year. How do you arrange to have your company shares with a transfer agent? Our advisor broker wouldn't get us a certificate when we asked. Well, you got the wrong broker. They're obliged to do that. If you want the certificate, they have to get it for you. That's it. He doesn't want, or she doesn't want to get it for you because that means you're going to likely take the business away from them. That's an example of what I was talking about. They are obliged to get you a certificate. Now, it'll be expensive. I've paid up to $100 for certificates, but it's worth it in the long run. Is there a USA version of beating the TSX? Yes, there is. It's called Beating the Dow, or Dogs of the Dow. It's based on Michael O'Higgin's work. And if you go to our friend Mr. Google and Google it, you'll find it. And I think it's very useful. I've used it in the past in the States.